Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. I talk a lot about commodity-based stuff because that's where the cheapest, most undervalued financial assets are. And today I'm going to cover the $100,000 portfolio. Someone had asked in the comment section, if you had 100 grand, where would I put it? This could be 10,000. It's just an order of magnitude. You can move a decimal over or whatnot. But I'm going to give you a very high level kind of what I would do given I had a $100,000 portfolio. So we'll jump in here. I'll talk about the $100,000 portfolio. And the first thing I'm going to do is say it depends. Again, remember, this isn't financial advice. This is just a hypothetical question asking me what I would do. I like having other investments like physical precious metals and mutual funds in a 401k. I already have that. So my viewpoint might be different than someone else who doesn't have that. I have a little less metals than I do stocks. So I have quite a bit of physical precious metals compared to what most people have. I do ratio investing. You got to keep that in mind, where I can swap metals back and forth. And doing that has allowed me to outperform the market with the least risk asset in the world. I have a good amount in mutual funds and a 401k. I really only play with 15 to 20% of my net worth in higher risk assets. That's all it is. And I really don't put much into exploration only companies. So I'm not putting the bulk of my money in those types of companies. And I know some people on this channel, it seems like they're pushing the risk profile, and I don't know their each and everyone's circumstances, but I don't push the risk profile with the majority of my money. I just don't do it. You guys can do whatever you want, but I would probably play it a little bit different. So if I had $100,000 and I had no 401k and no physical metals, what I would do is I would obtain some physical metals. I have some physical precious metals. I feel like I'm naked without them. And the companies that I would go after, if I had no other investments and all I had was 100K, is I would not be pushing the risk profile as hard as I would be, having other investments. So I'd be looking at some of the diversified mining companies that are much larger and some royalty companies. So VALE, SCCO, BHP, Rio, Wheaton Precious Metals, which is a larger royalty company, Nova Royalty, Ely Gold, Tooten Resources. Those are the small cap royalty companies. They kind of have a little bit of risk in those. I would be doing ETFs like URNM and REMX. That's rare earth metals and uranium. And then these are a little bit riskier. SM, CDEV, and CPE. And then I would be looking at ADM, which is Archer Daniels Midland, Mosaic, MOS, Stealth32, which is another diversified mining company, AG, EXK, MAG, Silver. Those are some larger silver companies that have production. I think I forgot one. NILSY is one I'd also buy. Norilsk Nickel. But I would be sticking to the larger companies, and they're going to provide quite a bit of leverage. But you can't take the risk like you could if you had $100,000 in physical precious metals and $100,000 in a 401k and $100,000 in a riskier, a higher risk portfolio like I would do, or like I have. I have a very large 401k. I have a lot in physical precious metals, and then I've got a much larger portfolio than 100k in these risky assets. But it's mainly I'm diversified out quite a bit. I don't have a lot of it on, in risky assets. So if you guys are piling into a bunch of exploration companies and developer companies, I just watch out, because sometimes they don't do that well. Now, if you have physical metals and you have a 401k and you've got all these things set up, you can push the risk profile more with more exploration companies. That's what I do. I'd be buying SM, CDEV, CPE, TTI, RECAF, TCFF, some of the ones that people like on this channel. I'd be buying the individual developer companies in uranium, Encore Energy, Deep Yellow, Bannerman, Global Atomic, Goviax, Laramide, all of them. I'll be going into the uranium exploration companies, which I am, which is that's Azincourt, UEX, that's Baseload, Fission 3.0, Sky Harbor, Standard Uranium, Canalaska, Blue Sky Uranium, going into all these. I'd be buying some of these exploration companies like Discovery Silver, Metallic Minerals, and then I'd have my EXK, AG, Mag Silver, maybe an Aftermath Silver as well. I'd have my royalty companies in there for sure. And then I'd still have my diversified mining companies. I'm still not 100% into the exploration companies. I forgot Norilsk Nickel on here too. I'd definitely get NILSY. So the difference here is the difference between the two portfolios is I have, for me, a lot of mutual funds, which are comprised a lot of the individual companies of diversified miners and energy sectors and all these other ones. They're big companies and they're diversified out. I've got a lot of money in it. I also have the ratio game playing all the time in the background with the physical precious metals. That's very low risk. Then I go into high risk exploration plays and sometimes put a small amount of money on some options. I do that. It's not very much money in terms of my overall net worth. And again, I think all roads lead to physical precious metals in the end. So what I do is I make a ton of money in my individual accounts. If it's not in a Roth IRA or something like that where it's protected and I can take it out, I keep funneling money back into the physical precious metals, building up what I call, quote, savings and insurance. I just keep piling into it. And in knowing what I know with the ratios, if platinum's cheap, I pile it into platinum. If silver's cheap, I pile it into silver. If I can get good deals on something else, I get a good deal and I buy that. I just go wherever the best deals are. That's literally it. And then I'm extremely patient. I'm not impatient where I have to have gains this month or this year. I don't worry about it like that. I've been cost averaging into platinum for 2 years. I held palladium since 06, 07, all the way to 2021, beginning of 2021. That's a long-term hold. And it went up a lot of money. It was in the mid to high hundreds when I was buying. Went all the way to 2,800. Then I swapped it into platinum. So this isn't like a game that's going to be won and lost in a year or two. Now, another thing that someone was asking is cost averaging in. I'm not telling you guys. So cost averaging in, yes, that's what I do. I cost average in over time. I don't cost average into things that are just continually going down. I cost average into what I think are the best opportunities and buy into strength. Into strength. Buying when it gets cheaper is buying into weakness. And make sure that you're buying companies that will eventually go up. Like the diversified mining companies, they're big companies. They will eventually go up. An exploration company may not. That may never come back. So I wouldn't be piling in a ton of money into an exploration company. I'd be piling it into, again, remember, cost averaging into physical precious metals, which has zero risk of default. So I pile in when it goes down because there's no default risk. If you're under the cost of production, you can pile in all the money you want. It doesn't matter. It's not going to go bankrupt. Would I do that with an exploration company, which could have a lot of problems? No, I wouldn't. I would do it to maybe a VALE like Vale, BHP, Rio. You can do it into some of those, but I'd still be looking for strength. I'd still want this thing to come back up and buy into strength and try to time it as best I could. And the royalty companies, the same way. I can buy coming back down because the risk isn't there. They're not going to go bankrupt. They have a royalty to a bunch of different properties. There's no dollars needed there. An exploration company, a developer company, it can be a little bit more, it's a lot more risky in those, a lot more risky. So I would be just dumping money into these things. And some of these, they don't have any revenue. So you got to be careful on it. You can't be just dumping in. Dump into the ones that have money that have cash flows that are a little bit lower risk, like an AG or an EXK or a BHP, South 32. Like these are big mining companies that are going to do very well over the next commodity boom. An exploration company can be hit and miss. they may not have anything. So I don't put as much money into those. Remember, I spread it out. I hope a couple of these hit. Looks like Recaf may have hit something. ISO Energy hit something. So some of these companies are going to hit. They're going to hit things, but you're not going to win on all of those bets. They're not 100. This isn't 100% win. Like, we're going to lose on some. They're not going to. Some of these may not go anywhere. May not. We'll see. So be careful how you're deploying your money, and when you cost average in, be careful what you're cost averaging into. You got to know what you have. And I wouldn't be piling into exploration companies only. I'd be diversifying out, getting a whole bunch of different types of companies, and I'd hold the bulk of my money, and I've said this before, and a lot of you guys probably know this, in royalty companies and in these diversified mining companies, the bigger companies that have money. I own a lot in EXK, AG, all these bigger companies that have production. The exploration ones, I'm much less, I have a lot less capital allocated to those. And in companies that are high debt, but they have production, they could be rocket ships, something like a SM Energy, CPE, which is Callon Petroleum, and CDEV, Centennial Development. But they do hold some risk, so I don't pile into those. I have a good amount, but and I'm not trading anything out of them. They've gotten quite large, those my holdings in those. But I'm just going to leave them and let them ride. So I just wanted to make sure everybody kind of knew this. I don't pile into the exploration companies. I'm spread out. I've got a lot of them, but I don't have the bulk of my money in them. I just want to make sure everybody understands that. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.